What's exacerbating things for the industry is the fact that commercial auto for fleet vehicles over the last 14 years, let's call it now, has done nothing but increase rate wise. And so those operations that may have been more asset based than non-asset based in an effort to save insurance costs have also moved into more non-asset based, right? At the same time that the light is being shown upon them. So now the hired and non-owned carriers are starting to take on more claims and more claim activity, which is then in turn raising those rates. So you have a kind of a double whammy here of almost no matter what you've done over the last, I'd say 7 years at least, auto rates, whether fleet or, hired and non-owned / contingent auto type have gone up. And there's not a whole lot that can be done to control those outside of maybe taking on some more exposure or reshuffling the deck a little bit or putting more insurance requirements on the 1099 population. So it's been a challenge for all of us to try and solve that.
Well, I would add too, Brian. I mean, you mentioned that the insurance rates have increased, running on 13 or 14 consecutive years, and it's not without reason, right? I mean, anywhere you look, you can Google the words nuclear verdict, and we're not here to talk about, that buzzword over and over and again today. But I mean, auto insurers in the transportation space are running at 13 consecutive years of a loss ratio over or near over 100%. Which is not favorable. So those rate increases are justified from the underwriting point of view. But what's more so happening is, when you have that kind of turmoil in the marketplace, in addition to rate increases, because ultimately they need to create sustainability in the market, you're going to find form constriction, right? And that's what you're seeing, now as we look into, this next slide here is in terms of more coverage offerings coming to the market, but coverage may be more restrictive. So as we kind of go through this, it's important to understand the differences in the coverages being presented to you. And you're going to hear this a lot. Ask a lot of questions, know your business and know the exposures that you're looking for if you are looking for alternative coverage solutions, because, definitely, as Brian mentioned in the opener, the devil's in the details, so ultimately, if something presents itself as maybe more cost effective, there's a good chance there's a reason for it.